Um, Good morning, everyone. I'm Irma from Performing Arts Forum, and you're all very welcome. It's great to see so many of you here today. Just a few housekeeping announcements before we start. We're expecting the presentation to take no longer than 40 minutes, and we will be recording, as you know, and we're going to share this and the slides with you after. We've made every effort to factor in all your questions that you've inputted, but we will have time for a Q&A at the end, and we won't record that Q&A at the end. This is an information session, but please do bear in mind that this does not constitute legal advice and that each situation should be considered on a case by case basis. And by way of a little bit of background to today, in Performing Arts Forum, we've been working on the revenue guidelines for well over a year now. Back in January, in the run up to the disclosure window, in collaboration with Irish Theatre Institute, we commissioned a position paper for the sector from Arthur Cox. And if anyone would like to request that, I'm going to pop my email into the chat shortly. I'm very happy to share that with you. And through all this process, HLB, especially Bruce Stanley and Peter Daly, have been supporting us and helping us. And it became clear that we really needed to do a meeting for freelancers on the topic. And we're really grateful to Bruce and Peter that they agreed to work with us on this. So thank you so much for coming in such big numbers. And I'm delighted now to hand over to Peter.
Great, thanks so much, Irma, and great to see all the names popping up. I can't see your faces, but I can see all your names popping up. It's really great to be here. For those of you who don't know me, my name's Peter Daly. I'm an actor and also an accountant. I used to work on my own, and I joined HLB about a year ago, joined Bruce and the team there, and having a great time there. Okay, so let me get started here. We've notes in the background. Irma, you might just holler if the notes stop working for whatever reason. So this is today's agenda. We're going to look at what Karshan is. We're going to give a bit of a history on where it came from, what it actually means, what are the implications to it for, in particular, theatre and dance companies, and also individual practitioners who might find themselves all of a sudden being told they're an employee when previously whoever they were doing work for would have been happy to take an invoice. We're going to take a look at the engager, whoever's employing the people, either as an employee or as a self-employed contractor, what their responsibilities might be, and contracts and paperwork, and the importance of documenting the decision as to whether or not the person engaging you has decided you are an employee or a self-employed contractor, because that's going to be key in the event of any revenue queries or challenges or anything like that. We're going to look at the practicalities of what if somebody is all of a sudden finding themselves negotiating having 2 or 3 employments at the same time. They're perhaps doing a job during the day, but they're also doing a get in or a get out on an employment contract at the weekend, and they're trying to make sure that they're not being put on emergency tax all over the place. So we're going to take a quick look at that. And we're going to look at expenses and the difference in approach that being put on as an employee might mean to someone who was previously a self-employed person. So we'll take a quick look at that. Then we'll look at the key takeaways and an open question and answer session. And as Irma said, we'll turn off the recording at that stage so we can kind of be as honest as we like about the situations that we're now facing in this kind of new landscape, I suppose. Great. So setting the scene. Why we're here today. So revenue has always, as Irma said, sorry, all of these notes will be shared with you afterwards. So don't feel the need to take, your own notes. These will all be given to you. But this is just a kind of a useful kind of backdrop to what we're going to talk about. So revenue's always had guidance about who was an employee and who was a self-employed person. There was a thing we used to look at called the badges of a trade. What meant that somebody had a trade, and they're all in the background now as revenue then looked at this new situation. But there was always a feeling from revenue that and from the wider kind of government bodies, that there was a certain amount of bogus self-employment being carried out. People who were on an invoice basis, but they only had one client. They went in and worked with the client, in their offices and stuff like that. And so from revenue's perspective, they would prefer more people are on employment contracts rather than self-employed contracts, because they get the money, the tax up front. There's no question about the self-employed person not paying it over because it's done at source, and they get the money in a timely manner. In addition, I think it suits the government's agenda that more people are protected by the stronger employment law that have been brought in this country, and particularly since we joined the EU. So overall, kind of the feeling was something, in the background, Revenue's always been working on this. And they got to a point where the Karshan decision itself was finalised in October 2023 in the Supreme Court. And it had been coming up through the courts for a long time. And basically what it was is Revenue took a case against Domino's Pizzas and said that they felt that their drivers who were being treated as self-employed contractors by Domino's, that they were actually employees. And they took it all the way to the Supreme Court, and Revenue won. And following that, and the Supreme Court gave this kind of matrix of evaluation of what makes someone an employee and what makes someone a self-employed person. So following that, Revenue themselves updated their own code of practice and guidelines about who is an employee, etc., which was always on their books, but they updated it as a result of that. And then they updated again in May 2026. And they've built in this Supreme Court's 5-step framework into the guidance, and they've told everyone, these are the new rules. They've been tested all the way up to the Supreme Court. We don't want any messing around. You have the rules, and we're going to be strict with anybody who doesn't now follow them. On the 30th of January, they gave a disclosure opportunity to everybody out there who employs people, either as employees or as subcontractors, self-employed people, and said, go back and look at what you've done for 2024 and 2025 based on this matrix of evaluation and this kind of key step down through the 5 questions. And if you feel that you were misclassified people as not as employees where you should have done employees, we'll give you up to the 30th of January 2026 to make a disclosure. And if you did that, the taxes and the penalties would be very restricted, no penalties, no interest, and just a certain amount of tax. And beyond that, then we're now into the kind of the current reality. And why we're here today, specifically why HLB are now talking to all of you guys through Performing Arts Forum, is that this very sector that we all work in is full of short-term engagements and a job here and a job there and a job that might last 6 weeks or 2 months. So it's really, really possibly more relevant to our sector than most other sectors, I would argue. And it also is a sector full of companies which are strategically funded, where they get a certain amount of money, and with that money they then put on a production and another production and develop this thing and develop that thing, etc. And then other people apply to the Arts Council for 15 grand of development funding, and they get 10 people into a room to try and move a play on, or they get 50,000 as an individual artist, and they're given a budget and expected to put some more money on top of that, guarantees, etc., and produce something. So basically, there's a lot of scope for missteps about who those people, those strategically funded companies, those individual artists who now have some grant funding. There's a lot of opportunity just to make sure we get this right from the outset. Okay, so we'll be looking at determining the employment status, actually going through that 5-step process and figuring out, is the person you're engaging an employee or a contract? And it really is done on a role-by-role basis. Now, obviously, if you put a bit of work in and decided, look, all actors are now this status, then that's probably the work done for that going forward. But there are certain other times when it is somebody is now being employed by a company for the very first time in this side of role, and the company needs to document, why do we think this person is an employee and we're putting on the payroll, or why do we think this person is not an employee? We'll be looking at the mechanics of getting paid right. That's particularly for kind of individual artists who are now finding themselves being put on employments where previously they weren't. And as we all know, the pain of getting your first week's pay and 55% of it is gone on tax, and you're going, what did I do wrong? So we'll be looking at that. And then from the point of view of engagers, people engaging people, just kind of structuring the engaging, make sure that the paperwork is right, that they've got that 5-step process documented and on file in the event that Revenue does come and take a closer look, either in the context of a revenue audit or even just, a compliance intervention or anything like that. I'd also say that and myself and Bruce, we've talked about this a lot. This is still very much a grey area. We'll mention that a lot as we talk over the next 40 minutes or so. We'll also repeat ourselves over and over again. We'll discuss stuff, then we'll come to the questions at the end of it, and you'll find we'll be repeating ourselves. I think no harm in that, because this is technical stuff. The more times we get a chance to talk about it and say it in a slightly different way, the more chances that we can absorb it. So yeah, it's a grey area. The guidance was brought out from revenue. The case was only settled in 2023. The guidance was brought out in 2024 and updated again earlier this year. There's been no cases on this that have been taken all the way to the Tax Appeals Commission. And we don't know from within ourselves like how revenue are treating it in the context of a revenue audit. So, we're at the frontier of kind of, how things are going to be going forward. And I think that as a sector, having that legal paper is a very useful thing, and also just knowing that the importance of documenting it from day one, so that if revenue does dip their toe in and look at a theatre company, they'll see that it's a well-organized sector that knows what they're doing and has considered this in good detail. Okay, so the Karshan decision-making framework. And just double check, Bruce, it is still me going on for this bit. Myself and Bruce are going to tag team during the day or during the next 40 minutes or so. I'm going to take certain sections. Bruce, then my colleague who's head of tax in HLB and excellent overall, is going to take over on certain other of the subjects. Okay.
So I think I'm taking this part, Peter, and then you take the next.
I'll gracefully step back. Thanks, Bruce. Over to Bruce.
Interrupt. Sorry, rehearsals didn't go great.
We didn't get a dress in.
So I'm just going to give kind of an overview here of the general overview of the Karshan case. That Peter's given a bit of the background there, but just how the matrix has been applied, how revenue have looked to what they put in with their guidelines, and then Peter's going to jump back in and speak about it specifically to the performing arts world. So, as Peter was saying in the background there, this was originally a Supreme Court case that related to Domino's pizza drivers, delivery drivers. And when the courts were trying to create this matrix to determine whether or not somebody was employed, an employee or self-employed, they were trying to basically create a matrix that would cover every single sector within the country. So they didn't look at the nuances of the performing arts sector, or the nuances of the hospitality sector, where this has had a big impact as well, or the nuances of the education sector. They just tried to get this general matrix tool that they could apply across all sectors indiscriminately. And because of that, that's leaves some parts open to interpretation. And that's why there are gray areas about whether somebody should or shouldn't be an employee, because it's not industry specific, it's not job specific, it's trying to capture all and everyone. And I think that's where a large part of the confusion has come from. So if we can kind of move on to the next slide, this is the decision-making framework. So there's kind of 5 steps. The first one is the work wage bargain, which is generally pretty straightforward. Is somebody being paid in order to provide a service? So usually that's kind of black or white. If there's no payment, then there's no employment. If there is payment, then you go on to the next step. So the second step is about the personal service, about whether or not the person must provide the service themselves. So, for example, if you're hiring an actor, that actor must be the person who turns up on stage. They can't just send somebody else in their place if they're not feeling well that day or something. Whereas, if you were hiring an accountant or a bookkeeper, they may have a team behind them and they may be able to substitute who's actually doing the work and provide the work to you ultimately. But it doesn't have to necessarily be the accountant that you hired personally who has to provide that service. They can have a team behind them providing the service, or they can put somebody else in their place. So if there's no substitution, then we kind of go on to the third question. And the third question is about the control of who determines where, how, when, and what the individual is doing. So with an example of an actor, there's a large part of control here in the on behalf of the engager, because they're determining the rehearsal schedule, they're determining the dates for the performance, they're determining the role that is going to be filled by the actor. There's a lot of control there. Whereas if you're commissioning a script from somebody, for example, the writer would be able to write in their own time. They don't have to be in an office 9 to 5, particularly at the behest of the engager. In order to do that, they don't have to report back on a weekly basis of their progress. They just get the capacity in order to go and do the work in their own way through their own process and provide the final document. So there's two kind of very contrasting sides of where the control would lie. Then the fourth question is actually the one where the real grey area kicks in. And in the revenue guidance on this, what they've done is whenever they've answered the first three questions yes, they've always answered the fourth question yes, which is a little bit misleading, I think, because the fourth question is where the real determination should be made. They don't provide, in the 19 examples, there isn't a single example where they've answered yes to 1, 2, and 3, and then then resulted in self-employment because of point 4. Test 4 has always resulted as well as employment in all of the examples. And I don't think that should be the case. The first 3 are just really to rule out. If any of those are no, then you don't even get to question 4. But if all 3 of those are yes, then you should be getting to the real question, which is what is the factual matrix. So the paper that Irma spoke about from Arthur Cox earlier is actually very strong on this and provides good examples of how question 4 could result in still being self-employed, despite questions 1, 2, and 3 being yes. So for examples on this is where somebody is able to move from project to project. They're not tied. If they accept one role or if they refuse one role, they won't get offered another from the same engager. If they have an agent or a team working with them, their accountants, they're self-marketing, they have to maintain their skill levels by going to voice coaches or going to kind of different lessons in order to elevate their skills so that they can participate within the sector. So all of those things within the fourth test appeal to the self-employed, but the revenue guidance, say, doesn't give a single example where that does apply. The fifth point then isn't particularly relevant here. So the fifth point is if there's any legislation which says that it's not a contract of service or that changes the interpretation. So for example, if you're a director of a company, you should always be under PAYE, even if there's no control in the company. If you control the company rather than the other way around, a director is always PAYE. But for today's purposes, the fifth question is not particularly relevant. So it's really those first four questions to focus on. And go on to the next slide. So who's responsible for what's at stake? So ultimately for deciding who's going to, whether the person is an employee or not, is the responsibility of the engager. It's not something that the two can do kind of in collaboration and decide whether or not somebody should be self-employed or an employee. It's always up to the engager to make the decision, and the responsibility and any penalties or interest falls on the engager if they get it wrong. So if you were determined, if you decided that somebody should be self-employed, but ultimately revenue came along and disagreed, it's the person who makes the payment that revenue will look to resolve the matter, charge the tax, interest, and penalties. The second point here, the disclosure window has now closed. So the revenue gave the opportunity for people to review the 2024 and 2025 engagements that they had. And if they felt there was a misclassification, there was an opportunity to come forward and make a payment over to revenue and disclose that these people maybe should have been employees. And the qualifying disclosure for this was the 30th of January, which is now passed. And if you didn't disclose by that time that the penalties for not disclosing, if it ultimately determined it was employees, was absolutely enormous. So if you disclosed, then you've got to treat the payment that you made to the employee as the gross payment that was taxed, and you got to tax it at the lower tax rate, a lower USC rate as well. So it ended up costing you about 30% of whatever you paid. So if you paid somebody €100, you got to disclose it would cost you about €30. If you didn't disclose it, and revenue so ultimately go back and decide that you should have, instead of the €100 being treated as the gross pay taxable, it's treated as the net pay. So in order to get a net pay of €100, because we're at a 52% tax rate, you've got to pay about €210, and then there's another 11% PRSI on top of that. So it costs you €131 in tax, plus revenue would put on interest, it would put on penalties, and they said that they would treat it as a deliberate default, that they didn't take care of or they didn't avail of the disclosure, and therefore they can charge penalties of up to 100%, and you could get published as a tax defaulter. So the difference between making a disclosure and not making a disclosure, if there was any grey area for engagers, was absolutely enormous, and it kind of forced the hand of people where if it was grey, you pretty much had to go along with the disclosure, and that's a position a lot of organisations found themselves in. I don't think any organisation that had to go ahead and make a disclosure did it happily or willingly. I think they did it because they really had no alternative when they were looking at the two options that were available to them. So going forward, if you get it wrong, the Karshan disclosure was in relation to 24 and 25, so that kind of regime is closed off now. But in 26, if you have kind of been paying somebody under the as self-employed and you determine that maybe it should have been a payroll, you can still make a voluntary disclosure in respect of any periods now from 26 onwards, without necessarily having those high penalties applied. But you do need to be careful and make sure that the disclosure is made in a timely basis. The document as you go, so this is the one thing. So Revenue's updated code of practice expects this 5-step guideline analysis to be done for every engagement, and not just a label in a contract. It's important that when you're kind of engaging people, that you do actually document, particularly if you're going to treat them as self-employed, that you've gone through the 5 steps and how you've actually reached the conclusion that they are self-employed. So that needs to be documented as you go. One other point to note here as well is that this only applies to individuals. It doesn't apply to a case where you engage somebody who's working through a company. So if you have an actor with a loan ad company and they invoice through the company, that's not an employment. You don't have to worry about PAYE. You can just pay the gross amount to the loan ad company. So that's what I have to say there. So these were some questions that came in, so we've just kind of answered those, but just to refresh. So who bears the primary responsibility for determining if an individual is employee or self-employed? It's always with the engager. It's with the person making the payments. It's not something that can be agreed between the two parties. The responsibility is always with the engager. What are the consequences if a worker is misclassified as self-employed? So if they are misclassified, then the engager, if Revenue challenge it and successfully determine that somebody should have been an employee, the engager will have to regross the payment. So an example, if they've paid for every €100 they've paid, they have to regross that to about 210 and then apply employer's PRSI. So for every €100 it costs, it's going to cost another €130 for the engager, plus potentially interest and penalties. So it's important that the classification is done correctly. If you have an opportunity to make a voluntary disclosure, if you've determined yourself that you've made a mistake, you can reduce those penalties and you can look for a lower tax outcome. Finally, what must engagers do to comply with the updated code of practice and the decision making? They should follow that 5-step matrix for all of for anybody that they're engaging as an individual, as a subcontractor. If they're not determined to be if they're determined to be self-employed, they really need to be able to kind of evidence that. They should also document the way that the person has been engaged, and also to have kind of a contract in place to provide for the service. So that's that, and I think I'll hand back to Peter now.
Great, thank you. Thanks, Bruce. So now we're looking at applying this Karshan, this 5-step matrix to theatre and dance. And again, you'll find there's a little bit of repetition in this, but no harm in that. So you're looking at, this is steps 1 and 2, again, a repetition, but you're looking at if there is money being paid for work being done. It doesn't matter if it's a written or a verbal contract. You know, as you might remember from contract law, if you ever looked at it, a verbal contract is obviously harder to prove, but just as valid as a written contract. So you need to look at each individual engagement, no minimum duration on it. Like, for example, I know certain theatre companies put you on an employment contract, PAYE, even if it's a 1-day reading. So, you know, because I suppose in that case there, you're turning up at their premises, they're giving you a script, they're giving you stuff to do the job, and you're spending the day with them and doing it and getting paid at the end of it. The personal service one, this is part two. This is whether or not you can send a substitute. And in some cases in the arts, you absolutely can't. I think Bruce mentioned, an actor can't send over another actor, even though sometimes we'd like to, in the middle of a theatre run or whatever, just because they are not available, not without agreement with the company, etc. So it is basically, there aren't that many opportunities for certain people in our sector to substitute. But there are in other people's cases. For example, crew and technical staff, they might kind of go, yeah, I'll be there on Saturday to do whatever it is you need to do, or I'll be there for the run. But they also can swap in and swap out. If they're doing that, it's much more helpful for the argument if they're the person who pays their substitute, rather than they kind of go, look, I'm not available. Will you take someone else and pay them directly? Although I wouldn't say that handing in a substitute and getting the company to pay them directly, I wouldn't say that mitigates it means that it is not, you're back into employment. I wouldn't say so, but it certainly helps if the person who is organising the substitute also pays for the substitute. So basically, this is just kind of summary of steps 1 and 2 in that. Looking at then step 3, myself and Bruce chatted about this, and we talked about what kind of points towards self-employment and what points towards employment. And we're putting kind of designers, directors, choreographers, we're putting into that self-employment area, which is probably how it works in most cases at the moment. You get the brief, you agree the schedule, you do a lot of the work off-site, in advance of getting into rehearsals. You might even, the production itself might be put on at a time that suits your schedule rather than the company schedule. You're trying to balance together theatre's availability, director's availability, designer's availability, etc. So and negotiating your own fee, and what one designer might be able to negotiate might be different from another designer, and that really does point towards self-employment. The fact that designers are usually registered as self-employed, and often in some cases registered for VAT, that helps as well when we get to the 4th kind of matrix point, where it's kind of looking at the overall picture. So we kind of feel like those people there are more in the self-employed category than the next one, which are the actors, the dancers, the performers, the stage managers, and certain technical crews, which we feel are more in the area of being employees. There's not as much scope to have more autonomy over where to do the work, when to do the work, with what equipment to do the work. So we feel you're more into that. That's not to say that there isn't certain people in the first category that are employees, that are not employees, and certain people in the second categories that are not self-employed. And it is just kind of something that needs to be looked at on an overall holistic basis, rather than now all of our actors are employees and now all of our designers are self-employed. And again, I think that we'll probably get into this in a little bit more detail when we get into the question and answer at the end of the session. And then we're on to the 4th one, which, as Bruce points out, this to us is the most this is the most important one. This is where everything comes together. Because I think that, in most people's cases in this business, you will say yes to 1, 2, and 3. You are being paid for work you do. You probably can't substitute in a lot of cases. And so you're ending up, down in number 4. So then you look at all the other stuff. Is the person using their own equipment, setting their own work schedule? Can they delegate? Can they work for multiple engagers at exactly the same time? That's pointing towards a self-employed situation. Again, something that points towards the employment. If there's no, I'll give you an example of financial risk. An actor gets paid the same whether or not the show does well or does not. So does a designer, but a designer has more scope to earn more money by taking on more work at the same time and being more efficient in how quickly they do that. That was something Revenue always looked at in the past. Is travel and accommodation covered by the engager? That often happens when an actor's on tour, stuff like that. So yeah, and again, we only come to this 4th question if we've answered yes to the first 3 questions. And there's definitely an overlap between the 3rd question and the control, and then all the circumstances. Again, this is a kind of a snapshot that might be useful to you afterwards if you want to go and take a look at it. But as myself and Bruce discussed in advance of this, and as I said at the top of the meeting, there are grey areas, and it hasn't been tested. So, it also is all about documenting why you feel that people are being put into the employee bucket or the self-employed, and in particular, documenting. I mean, revenue are not going to grill you about why you've put someone on unemployment. They'll just be delighted you've done it. It's when you've put someone into a self-employed bracket, is there any holes in your argument that they could poke at? I think one of the things we saw when we were talking to companies about making the disclosure for 2024 and 2025 is if they treated most of their people in one category, for example, maybe they're actors, as employees, but every so often they agreed with someone that they could send an invoice. That isn't, unless there's some remarkable circumstance to that one or two or three individuals, that's a hard argument to maintain, in the light of a revenue investigation or non-investigation, but review or query. So yeah, you've got different categories there. Again, it's the producers, the directors, the choreographers, the writers. We feel that they're almost always going to be self-employed. Performers are usually employees. And then with the technical production crew, I suppose with people like that, I'm thinking of production managers who might, be doing various different jobs at the same time, or dipping in and dipping out, and, can do a lot of the work in advance of the production starting and work on various jobs at the same time. They're possibly been pushed into the self-employed category. But I think a stage manager who's in the room with the actors and the director every day, and usually starts on the first day of rehearsals and works to the end of the production finishing, is probably in the employee category. And then there's a few kind of anomalistic ones down further on there. Practical checklist. So work wage bargain, is there agreement in paper, and what's being done for what money, what remuneration? Is the second one, is there any scope to substitute or to delegate some of the work down? I think designers is a good example of that. Some designers work with assistants who might do up the model box and stuff like that for them. The control element, again, we go back to the idea of a designer getting a brief and being given some deadlines, but it's up to them how they go away and do it on their own laptop, and producing in the model box themselves or the lighting plan themselves, and coming back and presenting it, and then being given changes and going back and refining, etc. Whereas your actor and your stage manager, you start rehearsal on the 26th of August and we need you every day, and if you need to go and do a voiceover, you need to agree it in advance, etc. And then we're down to number 4 again, just looking at the overall picture. Again, it's repetition. You don't need to worry about if you're not paying them. It's, for example, I'm thinking if you've got a kind of a co-production between a theatre and a production company, and the production theatre is, giving a guarantee to the production company, the theatre doesn't need to worry about this. It's the production company that needs to worry them. Personal service and control. If it's a no, that's question 3 with a no, and you don't need to go on to question 4. And again, we kind of, myself and Bruce, discussed it. Is there any specific legislation in the world of arts and theatre and dance? And we can't think of any, or none popped up. Bruce gave the example, if somebody's a director of their own company or director of a company, they're always an employee of that company. Another one is, I think there's specific legislation or definitely specific revenue guidance that if somebody does one day lecturing in one of the universities, they're automatically put on a payroll, even if it's just like an hour lecture. So yeah, if you are looking back, if you're kind of sitting in this session going, right, we need to go back and have a look, you quantify the PAY and the PRSI exposure for the individual. This isn't a situation where you're looking back and go, right, we've been paying people as self-employed, and really on balance they are an employee. And then you look at the quantity. If you look back and there's one person and you've paid them €100 in 2024, the amount of money you're talking about is not material. You could make a voluntary disclosure and hand it over. Interest and penalties won't be significant. So it's not something you kind of need to get overly anxious about if we're not talking about a minor misstep over the last number of years. So the questions we got through Irma and Performing Arts Forum is, if somebody is a genuinely self-employed freelancer up to this date, and they've paid their own preliminary tax, like, do they still do that? And I think it comes down to it. If somebody has been doing their Form 11s and they continue, they're not being put on payroll by anyone else going forward, then they just continue doing what they do. If somebody was previously mostly getting invoices and now they're in a situation where some people are putting them onto payroll, but they still have some self-employed, it just all goes into the same tax return. The tax bill is worked out and you get a credit for any tax already paid through the payroll system. That's what happens to most actors. You'll find that actors do a lot of work that is PAYE, for example, theatre work, but they might also do voiceovers, which is always self-employed, and all the self-employed stuff goes into the tax return. The PAYE stuff is already there with the tax already paid. The Form 11 works out the balance of the tax bill and then deducts the payroll tax already paid. Actors not on payroll, is this still possible? I think, considering what we've discussed over the last 20 minutes or so, I can imagine that there will still be some examples, but they will be outliers. And I would imagine, thinking about it, there might be maybe high-profile people who get to dictate the schedule, and possibly they have much more control on their side. So yeah, I think it's not. I think that actors traditionally have been on payroll in theatre jobs for a long time. In film and TV, there's a bit of both going on, but I'm finding more of the film and TV productions are pushing people onto payroll. But you still see some high-profile people getting away with issuing invoices. Production managers, designers, and crew not on payroll. I think we just discussed that. Production managers and designers might find themselves more in the self-employed category. Crew, it depends on the context of the job. The speaker and performer brought in for a single conference or event. I think my feeling is that still feels to me like a self-employed engagement, particularly like the speaker or performer, like they have the right to say no. They don't have to go in and do it, or they can kind of go, look, I can do it, but I can only do it on this specific date. So can you tailor it around that? So they still have a lot of control. This one we had a bit of a chat about artist development programs coming in and getting an honorarium or a stipend. Because they're not delivering a service back to whoever's giving them the honorarium or stipend, it's just kind of to cover their time, but they usually are not delivering anything back, then there isn't that yes to the very first question, is there money to deliver a service back? So my feeling is that they probably don't need to go on payroll. Does being a limited company automatically mean an individual cannot be considered an employee? Yes, if you're invoicing, if you set up a limited company and you're invoicing a production for your time, like a loan out company, then the company doesn't have to put in you on their employment. There's just two stumbling blocks I'd see there. I think that if actors in particular are going to set up limited companies and maybe they get a job in the Abbey or one of the companies, and they say, I want to go through my limited company, I'm just not sure how receptive the Abbey or whoever that might be. We'll find out as time goes on to that, because just traditionally it's not been done, and it's something I'll be interested if anybody has any feedback on that. The second thing is that if you set up a limited company and you start invoicing for your fees and everybody starts accepting it, you then as a limited company need to keep an eye on the VAT registration threshold, because you're now invoicing for services. And if you invoice for services above 42,500 in any rolling 12-month period, you have to register for VAT and charge VAT on your services. So if you're getting a theatre job and maybe you've agreed a fee of €900 per week, you're now charging for 900 plus VAT. And as you know, theatre is a VAT exempt activity. The theatre company can't claim the VAT back, so it's going to take it out of your end. So it is, you might get away with not being put on an employment contract, but you might, suffer the VAT being taken at your end. So it's not an easy solution to some of the issues that this thing is throwing up. I think we're back to you, Bruce, now. Is that right?
Yep, and I'm just conscious of time here as well. I want to leave time for a Q&A at the end, so I'll try to just get through this fairly quickly for us as well. And these are kind of just the responsibilities and contracts that I'm going to talk about when you are as an employer situation. So if we can just move on to the next slide. Can you move the slide down, Peter? Sorry. There, perfect. So yeah, so if you need to register as an organization, registering for as an employer is actually quite easy. If you're registered through Ross, you just go into the Ross into your Ross portal, go into manage my tax registrations, and then there's an option there to register as an employer, and you just put in some questions about when your first employee started, how many employees you're going to have, and so forth. Um, Also to note that sole traders can be employers. It's not confined to companies. So if you're not incorporated but you're still engaging other people to provide services to you, you have to look at this employment matrix as well. Um, you have to operate PAYE from the very first payment. It's not something that's kind of you do at the end. You have to. There's a real-time PAYE notification that's required to go into revenue, and revenue tell you what tax credits and rates the individual employee has, and you have to apply those rates as per revenue's instruction and deduct the tax accordingly. So it's not something where you can have somebody paid for the first kind of 4 weeks and then on week 5 decide to put them onto payroll. The Arts Council's, the different awards, it's the recipient or the organisation or the individual administering the award that needs to carry the responsibility to assess the engagement and see whether or not the people that they are working with are employers. The funding body, like the Arts Council, is not going to be the employer. It'll be the person who receives the award from the Arts Council, who is then engaging services that needs to make the consideration. Local authorities engaging artists for occasional one-off should apply the 5 steps. So rather than defaulting to a fee note because the engagement is short, we've seen a lot of this in practice where local councils are looking to operate PAYE in certain circumstances. And finally, freelance artists who are producing or hiring their own cast and crew take on the engager's obligations for this. So the same rules apply. Then the written contracts. So a written contract is strong evidence of intent, but revenue will always look to actually what happens. You can't just put in a note saying somebody is self-employed or that they have the right of substitution. Revenue will look is that practical? Is that what happens in reality? You can't just put in a clause there in order to kind of try to circumvent the tests. Verbal agreements, they are legally binding, but they're harder to evidence. And if you get into a dispute with revenue, it's more difficult to back up your case with a verbal agreement. So it's always the best to have it in writing in some sort. A basic letter of engagement should cover the period, the fees, the payment terms, expected date schedule, all of that. And the Performing Arts website also has sample contracts for engaging playwrights, performers, and other artists on one-on-one engagements. So it's a good starting point to, if you don't have contracts already, to use those contracts and then adapt them to your own circumstances. So then to the questions, what responsibilities arise from employing artists through an Arts Council project, touring award, or other funded project? It's the same situation where you have to look at the conditions, and control can be quite important here because sometimes you can have somebody's applying under one person's name, but it's actually a collaborative project. So that one person is kind of distributing the Arts Council grant between the collaborators rather than employing the other people and controlling the other people. But you can have situations where somebody is putting on a project, getting an award for it, and then engaging people under the same 5 tests. That does end up being employment, so it needs to be taken on a case-by-case basis. What obligations does a freelance have artists when hiring their own freelance cast and crew? It's the exact same as anybody who's potentially an employer. The freelance artist who is hiring the other cast and crew must go through those 5 steps and consider it. Because they're an individual doesn't exempt them from this. It doesn't apply just to corporate employers. It also applies to individuals. How should local authorities pay artists for occasional or one-off work? It's again, they have to go through the 5 steps. So if the local authority has a lot of the control and they're paying for a service, they need to consider whether or not the employee is an individual. Most organizations, being conservative, will probably go the employee route because that's the one that protects the person making the payment and they're the ones who are at risk. So it tends to be a default going as an employee, treat the individual as an employee rather than self-employed. But if they are going self-employed, then to have the matrix determination decided before that. What is involved in registering as an employer? It's relatively straightforward. You just go through the revenue online system, as I said, and there's an option there to manage your taxes. then you can select which tax you want to register for. It's the same kind of as the VAT registration or the employer registration. The employer one is actually easier than the VAT registration. You just click on that, say when you're going to hire your first employee. It asks you a few very straightforward questions, and the registration happens within a couple of days. What rights do artists have where there is no written contract and verbal agreements legally binding? So the verbal agreements are legally binding. It's obviously more difficult to prove what rights are there if it's only verbal. If there's no written contract but there is a deemed employment, then the artists have the basic employment rights in relation to holidays, sick pay, leave, all of that sort of thing. So if it's only a verbal agreement, anything above the basic employment rights can be difficult to prove. That's
great. Thanks, Bruce. I'll take a leaf out of your book and get through this so we can get to the question and answer. So payroll practicalities, multiple jobs and switching, etc. And again, this is relevant for people who previously might have found themselves on self-employed jobs, and now they're all of a sudden dealing with being in either a PAY job or multiple PAY jobs at the same time. So if you're not in any other employment, it used to be the case that you went and registered the employment, and I still get emails from clients kind of going, can you register this new employment? We're not allowed to do that anymore. Revenue took away that facility about 2 years ago. So what you do is you log into My Account, or if you've got a Ross search, you log into Ross, and you just check to see if you've got any old employments that are still showing up as active, and if they are, they'll be holding on to your tax credits, etc. And you just go in and cease them. And once you cease them, when your new employer starts paying you, it automatically picks up the freed tax credits. And if you get your first week paycheck and something's up, you can always ring revenue on that number that I put down there and ask them what's going on. You can online split your credits across a couple of employers, and this is particularly relevant if you're like earning not a massive amount from one employer and not a massive amount from another. If you're earning more than, about 800 from one employer, it doesn't make any difference how you split them. It's all going to be taxed. As long as all the credits are sitting with one of them, you're probably going to be taxed fairly on that. But you can do them online, but it's much better, in my experience, to go and phone them at 9:30 exactly and ask them, tell them, okay, I'm getting 600 from this crowd, but I also work for this crowd at the weekends, 200. Will you split my cutoff so that I'm not being taxed at 40% in one and not using all of my 20% bracket in the other? You can absolutely be PAYE in one job and self-employed at the same time doing other stuff. In fact, that's, as I said before, that's what most actors do. And again, you just put it all in the same tax return at the end of the year and work out the tax bill, and you get a credit for the PAYE already paid. Yeah, there's no ability to average your earnings across employers. You just can allocate your tax credits and your cutoff. That's the facility that you do it. So yeah, auto enrollment as well. This is the new pension thing that started at the start of 2026. It's not relevant for anybody on a self-employed job, but if you're now in employment and you weren't before, and revenue, what they do is they look back at your level of your income in the previous 3 or 6 months, and if it's above a certain amount, they automatically tell your employer to deduct 1.5% from your wage, and they make the employer add an extra 1.5%, and that goes into a little pension pot for you that you can log into via the My Future Fund portal. So if you've been paying pension on auto enrollments at the start of the year, go and check it out. It's a kind of a really pleasant surprise when you see there's a little pot of money building up there, and that can happen on a short-term gig or a more permanent job. A few people asked this question, so this is the reason we've got this here. If you're now being pushed off self-employment into PAYE, but you've already paid preliminary tax, say for 2025, or 2026 or 2025 at this stage, it's not lost. Basically, it's in the system for you, and if you now find that you've been pushed onto PAYE, you'll get a refund of the preliminary tax that's already been paid. So it isn't lost in the system. PRSI Class S is what you get if you're self-employed, and you get a full year. As long as you have income more than 5 grand, you'll have a minimum PRSI contribution through your Form 11. You'll find that some PRSI you paid, and if you pay some PRSI through that, you'll get 52 Class S contributions. Where if you're now been put onto Class A, you'll find that you'll get, maybe if you've done a 10-week job, it's 10 weeks of Class A, and then you might have nothing for another period of time. You can check your PRSI at any point via My Welfare. You just go to my GovID and go to My Welfare. If you're, as I said before, if you're moving from self-employed to PAYE, you just do the Form 11 and you can flip between the two on the, put them in the Form 11 and it'll give you a credit for the tax already paid. Well, as we said before, someone doing 1 day on a job can still be a PAYE person. So you have to go back to that 5-step framework all the time. And then this is something we added in, is that if you're now fully going to be an employee, but you have been self-employed, make sure to deregister for income tax on Ross or on my account. Otherwise, Revenue are going to keep looking for that Form 11 each year. And these are some of the questions that we were asked. How can you avoid emergency tax? You go onto my account or Ross and you check to see if your tax credits are being held by an old employer, and you just cease that and then it'll release them. If you're doing multiple jobs, I think the best thing is just to phone Revenue. Again, that's the same answer to the second question. A tax already paid in advance, you'll get it back when you do your return. The PRSI, you can go and check the PRSI on my GovID. It's a more complicated question that if you move from being fully self-employed to fully PAYE, you'll find that you might now qualify for job seekers as opposed to job seekers self-employed. The pension should be the same as long as you're getting 52 contributions. Class A and Class S are worth the same when it comes to pension contributions. And again, you can check your PRSI at any stage in my GovID to see how is your PRSI contribution building up for your pension. And then no, there's no minimum threshold of hours, days, or earnings. Someone coming in and working behind a bar for 2 hours every week, they're probably an employee. Expenses, yeah, this is me as well. Excuse me. So as you know, as a self-employed person, you can, excuse me, deduct a broader range of expenses as long as they're wholly and exclusively for the trade. When it comes to employment expenses, they have to be wholly, exclusively, and necessarily for the employment. So it's a tighter thing. So you'll find it in most jobs, most PAYE jobs, there are no expenses that you're allowed to deduct, but in some areas you can get a flat rate expense. For example, actors get $750 that's supposed to cover all of their expenses that might go with the PAYE acting job. Actors can also include their agent commission. So you might find if you were previously self-employed and you had certain expenses you had to pay for, and now you're an employee, you may not have the scope to deduct them from your employment, but you might find you've other self-employed that you can deduct it from that other self-employed. There are some certain circumstances where you can claim expenses back on your payroll stuff, but it's few and far between. Significant expenses occur before somebody formally registers self-employed. I was having to think about this. My instinct on that is that if you're about to become a self-employed person, but you don't open your books effectively and start taking on work till halfway through the year, but you incurred expenses from the start of the year, my feeling is that you just register from the start of that year and it covers legitimate expenses in the build-up to opening your books formally. Yes, previous income and expenses be included in registering as self-employed later. I mean, you effectively have to register from a certain point in time, and it's your income and expenses from that time. An Arts Council grant, it'll never be treated as employment income in your hands from the Arts Council. But again, you need to look at if you're engaging people with that money, are they then becoming employees of yours, basically. Artists compensated when they provide their own equipment and they're on payroll. I think that's a negotiation between you and the employer. And also then in certain situations like equipment, you might be able to claim a capital allowances from revenue by doing a tax return, either like a simple Form 12 or a more comprehensive Form 11. Yeah, so is it better to register as a sole trader or simply declare additional income if earnings are modest? You have an obligation to register as a sole trader, register for income tax if your non-PAYE income is above $5,000 in the calendar year. Below that, you can push everything through a very simple form. I'm sorry, when you register for income tax, you do a Form 11. You can push everything through a very simple Form 12 through my account. Whether or not there's benefits, the only difference is that you will pay, if there's benefits, if you're on a maybe $3,000 of additional income, if you push it through a Form 12, there's no extra PRSI to be paid. But if you put it through Form 11 and your overall incomes are above 5 grand, you will pay PRSI, and that'll give you PRSI contributions, which might be worth considering. Over to you, Bruce, for the key takeaways.
Yeah, well, I suppose the key takeaways here, just to quickly run through them, there's no shortcut on this. You need to go through the 5-step assessment, particularly if you're treating somebody as self-employed. You need to then document your reason for that. The Karshan disclosure case is over now, so anything that comes to light will be fully taxed with unmitigated penalties. Whenever you're looking at your grants and your budgets, you need to build in the PAYE and the employer's PRSI and all of the payroll costs from the outset. The sample contracts are up there from PAF, so they're a good starting point and to use those. And it's important to acknowledge that there is still some grey area on this, but the risk is with the person who is the engager and the employer. Documenting any reasons and conclusions for not being treating somebody as self-employed is key for anybody who is engaging. If there's any doubt, of course, you can always come to HLB Ireland or to Performing Arts Forum. We're all here to help members through these specific issues. And that's it. If there's any questions, we'd be happy to field them now. I think there's some coming in through the chat.
Yeah, so thank you so much, Bruce and Peter. That is just so much information. Just to say what I'm going to do now before we move on to those questions that came up in the chat is just for now, I'm going to stop the recording. So thank you very much. 1 second.